All right, cool. So let's make sure everybody's muted. I want to make sure I want to have it to where I'm allowing people to unmute themselves if need be. But if it gets too noisy, I'm just gonna make it to where you can't unmute yourself. So just try to keep the background noise down. And who's ready? That's one more time. Put it in the chat if you're ready. Let's go. Let's go. All right. Now, help me out here. If this is your first time on an advanced class, type 1 in the chat. This is your first time in advanced class. All right, so we got a lot of new people in advanced class tonight. All right, hopefully you guys have been through the beginner and intermediate stuff, because we're not going to slow down. We're going to jump right in. Now, if you're a regular to the advanced class, go ahead and type 2. There we go. There we go. So you guys know what to expect. You guys know what to expect. I like it. All right, cool. So I got a couple of screens going right now, and I'm gonna try to show you guys something, and it's gonna be sweet. It's gonna be powerful. So first thing we're gonna do, let me share my screen real quick. Give me 1 second. All right, here we go. Let's get it. All right, guys. So if anybody else jumps in, we're just gonna let them catch up where we're at, and we're just gonna jump right in where we are. Okay. So first thing, I always like to start out my class by talking about some principles for advanced class. Number one, this is advanced class. So I say that to say this, that if if you got a question, that's fine. Put it in the chat. During that, if we have time, we may take some questions verbally at the end. But just know that this is advanced class. So if you ask a question like, what is a pip, or what is a trend line, or how do I mark out a zone, I'm just going to tell you to go back to beginner class or intermediate, like that, not to be disrespectful to you, but to to save the people's time and money that are paying to be in advanced class. So you got to grind in the beginner and intermediate before you're really going to be ready for this class. Not to say you can't be here. We want you here. But if it's over your head, that just means you got to go back and grind and watch some more videos. Be on the beginner and intermediate classes. Robert and Jay are killing those classes. If you're brand new and maybe you're like, you don't even know nothing about Forex yet, you need to be on Wednesday's class with Tom. He's going to go over setup and some real basic principles, basically a new member orientation. And he can get you set up with that. So, but for tonight, this is advanced class. So if you have advanced questions, then that's cool. Or something that's pertaining to the topic. All right. So, secondly, I always like to start out my class with a little rundown of where we are. Okay. And man, if you've been in class, it's been crazy. It's been crazy. So, everything on you. Well, number one, you already know I only trade GA and gold. And honestly, man, y'all been going crazy in that chat. I see y'all talking about gold this, gold that, gold being, man, I told y'all a month ago I broke up with gold until she gets right. You know what I mean? Like I'm done with gold until gold starts to normalize a little bit, because with everything going on in the world right now, obviously there's extreme volatility in the markets. There's a lot of craziness going on, and we can very easily get tricked. And there's a lot, just a lot of stuff going on in the world. So the gold market is heavily affected by that, which is why you see it going crazy, which is why you haven't seen me call out a gold trade in over a month. Because I'm not about to send out a trade just to send the trade. Now, let me tell you another thing. And this really ain't for advanced class or anything like that. but just to kind of help you out here, and to kind of help everybody be on the same page in the group. I be seeing people come on there talking about, where's the signal at? Or I see new people. A lot of people even ask me on YouTube and stuff, you know, like, how many signal do you guys send out per week or per night? Do you send signals out every day? And luckily for you, we do send signals out mainly every day. We send a lot of signals out, you know, or not signals, but trade setups. We send a lot of trade setups out, and show you, you know, what the market is doing. But the truth is, guys, we got to get our mind right. We only take what the market gives. You know, we can't say, okay, I'm gonna give you 3 trades a night, because what if the market don't give us 3 trades a night? And what happens is these cats out there pushing these signal services, they're telling you we're giving you 3, 5, 10 trades a night, whatever. They're lying to you, because here's what's happening is they're forcing trades that don't need to be taken because they're trying to meet a quota. They're trying to keep on track. What we're doing, we're not giving you some quota. We're not giving you like, okay, this is how many trades we give you per week or per night or whatever. We're giving you what the market gives us. All right. We're showing you what the market gives. And if there's a night that goes by that the market don't show nothing nice, guess what? We ain't going to take nothing. Right. And so we're just going to go to bed and we're going to say, okay, it is what it is. Some of us, I see it in the group, and I'm just talking to you as the advanced trainer out here. Let me talk to you a little bit. Let me get your mind right. Don't force yourself into taking trades just because you want to take trades. You know, don't be just trying to force the market to do what you want it to do, because you can't do that. You got to take what the market gives. If the market ain't giving something that's meeting the rules, and go to bed. Go do something else. There's a lot of other things to do in life, right? The whole purpose of trading is to get your time freedom back to go do what you want to do in life, right? We don't want to sit here with our entire life staring at candles that ain't doing nothing. We don't want to be staring at charts that aren't giving us anything, right? I don't work for the chart. The chart works for me, right? I'm not the employee here. I'm the boss, right? And so I can't just sit here and stare and be slave to the chart, right? I'm going to sit here and I'm going to see, okay, what's the chart what's happening with the chart? All right, there's a job for the chart to do. Boom, the chart's going to do it. But if there's nothing for the chart to do, then guess what? I'm going to give the chart a night off, because I'm the boss. I'm not a slave to the chart. I'm not an employee to the chart. And I want you guys to adopt that mindset. We're not just staring at the chart just because we want to be staring at the chart, forcing something. We want to take what is profitable. We want to take what is going to get us into major profit. We don't want to just take any old thing, right? Does that make sense to everybody? Go ahead and type 1 in the chat if that makes sense. I see some slow. All right, there we go. There's the ones. I thought y'all being slow on me. I'm like, hold up, y'all trying to force the markets or what? You know, let's get our minds right, folks. Look, it's all about taking high probability setups, right? High probability. Anybody who the meeting ID is at the top. I see somebody asking about the meeting ID. If you just hover over the meeting itself, the meeting ID is at the top, 263-161-720. Okay. In fact, let me type that in there for you real quick. 263-161-720. There it is. All right. So, but guys, we just got to get our minds right. You know, that's that. I hope everybody will adopt that. You know, you sometimes you don't see me on the group calling a trade every single night, because that's my discipline. That's what I do. I probably only take 2 to 3, maybe 4 trades, you know, in a whole week. You know, I take high probability setups. If you've been on any of my classes, or if you've been on any of my YouTube videos, you've heard me talk about the fact that we don't just take setups, we take high probability setups. Nothing is a guarantee in Forex. We're just taking what is a high probability. We're looking at something that meets a certain criteria, and everybody's criteria might be a little different, and that's okay. But you got to have some criteria in place that says if the chart doesn't show me this, and this, I'm not taking the trade. And I'm just being real with you, okay, guys? Let me mentor you for a minute. I'm just seeing a bunch of people that are chasing stuff. I see it happening in the group. I see y'all chasing things just because you want to trade, and I get it. It's exciting. You're learning something that's going to change your life forever. It's powerful. I love it. I love the excitement that's in the group. I mean, there's no other group out there that's like our group. Our group is killing everything because of what we got going on, right? We don't take losing trades. How many of you guys have seen our trades lose, right? They don't lose, right? We win. Because we're taking high probability setups and we're giving you both entries, both buy and sell, right? So the point I'm trying to make, guys, is there's got to be some rules that we have, and you need to make those rules. Okay, you need to make that based on your strategy. And now, if you can look at Jay's confirmation list, you can look at my set of rules, you can look at all those things and use those, and that's fine and good. Use it; they work. But at the end of the day, all I'm trying to make sure that you understand is that we're not just forcing the issue. All right. Everybody with me? One more time, just hit me that one if you're with me. All right. All right, cool. Everybody's with me. All right. So now what we're going to do is we're going to look at this. I trade GA and I trade gold. Like I said, I don't really mess with gold right now because all the craziness going on. So we're going to look at GA. And GA has been paying the bills. GA has been doing really well for us. Even though GA has been a little crazy, GA has been showing some kind of odd movement, but we're still, we're still getting a lot of pips out of GA. It's still showing us a lot of good things, right? So what I want to show you, and I've showed this to the class every single week for the past, several months. Probably some of the students that I have been with me for a long time, they've seen this chart over and over and over again. But we always try to look at what we see right here, okay, or right here. And I tell the students every week, we got to zoom out, right? You might look at this and say, see, that's bull movement, or see, this is bear movement. Like let me give you a real good picture of what I mean, right? See, if I were going to replay mode right here, watch this. Let me show you something powerful, right? All right. So I'm taking it into replay mode. Most of us that maybe don't know exactly what we're doing, if you're looking at it like this, you seeing a double top, you're seeing some kind of reversal, and you're going, oh man, look, the chart's about to go down, right? This is bearish. We see some bearish movement here, and we get fooled by that because this is the only thing we're looking at: high, low, higher, lower high, lower low, right? So we say, look, boom, we drop a trend line on it, and we say that's a down move. But I got to tell you, there's more to it than that, because look what happens if you take that as a bear move. Oh, I pressed the wrong button. My bad, guys. If you took that as a bear move, right? Here, let me just X this out. If you took that as a bear move, you could see what happened. It was nothing but bullish, right? It was nothing but bullish all the way through. So what I want to show you do is I want you to zoom out. I want you to look at the bigger picture, right? Again, if you're new to the class, I want to show you this because it's powerful. I want you to look at the bigger picture here. When you look at the bigger picture, first of all, we're doing top-down analysis, right? So we're looking at the weekly chart. So every one of these candles is a week. That's beginner class for you. But when we look at this, when we look at all of my markups right here, we can see that we've been in this upward swinging channel for over 3 years. But recently, with news and coronavirus and everything else, we've kind of broke out of the channel. A lot of that in the beginning was due to gaps and due to a 1,000 pip candle on news, 1,200 pip drop in news, of course, coronavirus, fires in Australia, elections. There's been all kinds of stuff going on. And so I'm going to give you a little bit of insight with this. When we look at the breakout here, when we see this channel, obviously we know that generally a rising channel like this generally breaks out bearish, okay? We generally will see this channel going up and it will break out bearish, because essentially what we're seeing is this, a push up and then down, right? And we're trying to push down to meet our old extreme low. That's really what the price is trying to do, all right? However, Aussie dollar has had no strength. GBP has had mixed results, but with news and everything else, we've had a lot of bullish movement. All right. So if we know that we're in a channel that's 3 years old, then we realize it's going to take some serious movement to get up out of it. Well, news has to be corrected. So let's zoom in a little bit. If we know we're in an upward swinging channel and we're here, right? Let me make that a little bit bigger for you. All right. If we know that we're in a upward swinging channel, and let's just say we're here, which is where we were, you know, a few weeks ago, 4 or 5 weeks ago. And I told everybody we should not be looking for anything bullish right now, because look at where we are at the top of our channel. Why would we ever want to take something in a buy when we have such an extreme level right there? You know what I mean? Especially on the swing trade, we would never want to take that, because I mean, look at this. Yes, it's a lot of pips, right? You're looking at 180 pips, but on a weekly chart, that's really not all that much, you know? So we would never want to take a buy. And you say, well, look, all of this movement up, but look at that. That's sloppy movement, right? Is that high probability? No, right? Who expects this to happen all the way up and in 1 week to drop all the way back down, and then a 500 pip gap, and then to go all the way up and then drop all the way back down and then come all the way back? Like, what kind of crazy movement is that, right? And then another one that happened, drop all the way back down, then all the way back up, and then this is crazy that we've had a 500 pip gap, a 280 pip gap. Then we didn't gap on the weekly. We pushed up, we pushed way back down, and we rejected the zone. This week so far, we're trying to push down again because price is trying to get down. But the issue is that we've got a lot of craziness going on. And so the longer this craziness goes on, the longer that we have abnormality in the market. However, here's one thing I will say. Sometimes when news happens and there's a correction in the market, we almost set a new normal, right? And it's kind of like a new normal, right? And how do we know that? Well, when we have abnormality, right, we generally will have correction to follow. So right now, we have a lot of abnormality, and what we really need to see is we need to see a candle finish red, right? We need to see a candle finish, not just pull back and then come all the way back up. I'm talking about we need to see a candle finish from right here. Let me show you. From right here to right here, that's our level of normality. That's the last time we knew normal. All right. So it's kind of like in the Bible, you know, when you don't really know exactly what to do, you do what you know to do, right? And that's kind of where we are in Forex right now. The last time we knew normal was right here. When we broke normal, we finished right here. So this is our zone of normality. We have all of this crazy movement that we know is manipulated by coronavirus news and everything else. And nothing has finished red. We've had nothing but bullish movement, even though we've had a ton of down movement. Like, for an example, this blue candle right here finished blue. It finished in a bullish, you know, quote unquote, a bullish candle. But really, when you look at the movement of it, it started right here. It came down, was red for a little while, pushed way, way, way up. And of course, wow, what a major blue candle. But then it pushed all the way back down and finished here. So is there more seller movement or more buyer movement in that candle, right? I understand that it's blue, but that's a bearish candle because you have more movement to the downside than you do to the upside. Same thing here. You have a candle that gapped up 500 pips. So we're expecting it to fill the gap, right? We're expecting the gap to come down and be filled, 500 pips to be filled. Well, it did that in about 10 minutes. As soon as the market opened, it was crazy. Some of you guys remember when we were in class watching it, and it just bottomed out like crazy and then shot way back up within a day. It was just crazy. Obviously, we know that's not normal, and that's not a true filling of the gap, right? Because it didn't close down there. Then we get another 280 pip gap, and we push back up, we push way down, and now we have bullish movement. This is where I told everybody, you know, we got to start being real cautious, because we might try to come back to normal, because you have two major bearish candles. Even though they're showing bullish movement, they have more sell pressure than they do buy pressure, right? But this candle here has more buy pressure than it does sell pressure, and so does this one here, right? So now we're looking for something to normalize. We need this gap to be filled. Eventually, somehow, this has got to come back and fill this gap, okay? So what we really need to happen in order for us to see a normality reset in the market is for a red candle to close. We need something to close lower than it was before. Now, will it get all the way down here? I don't know. I think it will. But here's what I want us to understand. Right now, we've been outside of our channel for, you know, essentially 5 weeks. And we've been closed outside of our channel for 4 weeks, right? This is our 4th week. When we start to affect weekly candles, that now we've basically gone up a step, right? So essentially, remember when we were looking at this here, these 3 candles, even though they were outside of the channel, the monthly candle was still inside. But now we're having a 4th candle. In other words, we're seeing a completion of a monthly candle, okay? We're seeing a completion on the next level up, which is a monthly chart. And if that closes outside, we don't have a gap on the monthly. So if we see that close on the outside and we see a red candle close on the weekly, be clear here. Let's make sure we're understanding. A red candle close on the weekly showing pullback, and a monthly candle that closes outside of our channel, we can call that a new normal. Because now, essentially, we're not looking for a gap to be filled on the weekly anymore. Now we're looking for a new start on the monthly chart, and which means we're talking about major momentum that's going to come into the market. And if that happens, guys, we're looking at something like this, where it's going to retest off of here, and it's going to shoot up like crazy, because look what you got. You got, before you hit the next major level, you're going to break out of this level. You're going to see it pull back and break through. And if it does, let me show you the measurement here, guys. We're looking at a major move of about 1,250 pips, right? 1,250 pips before we enter into the basically the dead zone, the red zone. All right. So what I'm trying to help us to understand today is I'm still anticipating that our channel is not yet completely broken. But I really want to see something close inside of our channel again, because if not, we're starting to look at a monthly move that's going to close outside of the channel. Does that make sense to everybody? Gary, if you got a question, type it in. Right now, we're looking at a lot of fakery, a lot of crazy movement, but we have some red movement here. But guess what? We had some red movement last week too. We had some red movement the week before. We had some red movement the week before. And it never ended up red. It always kind of comes back and goes blue, because we end up closing. Really, all that means is that we're closing higher than we did before. But that doesn't tell us much if we're gapping 500, gapping 280, right? That doesn't tell us a lot. If it ends the way it looks now in the weekly, looks like a retest to push higher. Yeah, it does. If it were to end, if the candle were to end right here, right now, if the week was over today, I would tell you we need to start looking at the monthly chart to see a breakout, a true breakout on the monthly, okay? But I do want to see what this candle does, and I want to see, are we looking at setting a new normal, or are we going to have something that closes inside of our channel? If it closes inside of our channel, now we have a whole nother 4-week process to wait for, right? 1, 2, 3, 4. We have to look at the month of April and May, like that. If we have to look at that, now we have to start looking at, the next one. And so anytime you see it stay outside for more than the course of the next time frame higher, then this move is no longer valid, and you have to look up to the higher time frame, and your top-down analysis has to start at a higher level. Does that make sense to everybody? Said, I love to come and see again and again when we have these crazy wicks in the market. At some point, the market has to come back and fill the gap, being that it broke the channel. What are your predictions? Yeah, so that's what I'm saying right now is my prediction is really limited because I would love to tell you, hey, we're going to go and we're going to hit this. Or, hey, we're going to come and hit, you know, down here. Let me show you something. Watch this. We already saw 1,250 pips to the top, right? But look, if it breaks down in here, remember, we got these little zones to break through. And right here in this area, that's the sell zone. Down to the bottom, you got 1,150 pips, 1,160 pips. So either way we go, we have a major move coming. We just need some normality, right? Either way, whether it goes bullish or bearish, we're happy. It doesn't matter to us. We're happy either way because we're going to catch major pips no matter what. If it goes bullish, we catch 1,250 to the upside. If it goes bearish, we catch, 1,160 to the downside. And we're happy either way. I just want the pips, right? I just want the money. So it doesn't matter to me which way it goes. I'm just saying that we cannot make a truly educated decision until we see normality. So one of two things has to happen. The gap back to normal has to be filled. We have to see the gap come back and be filled, truly filled, and see some type of normality, either a retest or a break of normal. We need price to get back to where it was supposed to be. Or we need the next time frame up to set a new high. Essentially, we need to see something that is going to close outside on the monthly and then a retest on the monthly that is going to push us even higher. That's when we come back down and do our top-down analysis from the monthly instead of the weekly, okay? Because essentially, we want high probability trades. I'd love to tell you, hey, we're sitting on top of the channel, buy. You're going to hate me if I tell you that, because if it comes back inside, you're going to say, oh, you called a false signal. And I'm just saying, no, I just don't want to, I'm going to wait for confirmation. Trading it now in the 1 hour is crazy. Yeah, I mean, I'm going to talk about that in a minute. Yeah, but yeah, trying to buy off of this right now is crazy, but trying to sell against it is crazy too. If it breaks back into the channel, which should return normality, then we look at the break to the downside. Yeah, if it comes back in and shows us normality back here, now we're back to normal. So really we're back to zero, right? So now at that point, we're just looking from here to see, are we going to push back up or are we going to push back down? Because if you look at my correction cutoff strategy, remember, and those of you who've been around a while, you know my strategy on that. But when you have news or abnormality, you wait for the correction. Then you count the pips of normality and know which, you know that's what you got coming. So let me show you this. If, like, for an example, the last normality ended here. That stopped here. That's only 65 pips. That's nothing, guys. But watch this. When you see from where that gap was all the way to the top up here, that was 974 pips, and then came right back down to 36 pips up. So essentially, we had a move of 974 pips, 900 and something pips, and then a 940 pip correction that did not fill our gap, right? So essentially, we have 65 pips in the market that we know that the market was trying to give us 65 pips. The market was trying to give us a move of 65 pips. But when news and all this other craziness started happening, and really coronavirus, that's really what is the major player here. Some of y'all are already writing on the screen. Y'all got to quit with the writing on the screen. When we look at the 65 pips that it was trying to give us, when we look at that, watch this. Come right off of the top of that 65 pips, or I'm sorry, of the beginning right here, the top of your zone. Come up 65 pips and look where we're at. We're literally approaching right there at the top of our channel, which means that 65 pips would have put us right there, maybe with a wick, who knows, but to come right back down, right? We would have, when we zoom out, we would have looked at a channel that's approaching the top, something similar to this, right? How it gets close to the top, right? And then ends up going back down to the bottom of the channel. 65 pips would have got us there. But because of all the abnormality, we're still not normal. And obviously you guys know the markets are going crazy right now. There's stimulus is going on. There's, you know, there's stimulus checks being sent out or not sent out. Who knows now? There's governments that are voting in leaders in Hungary that now they have full rule. They don't have to be voted out anymore. You got the European Union that's going crazy, divided against itself. You got the Democrats and the Republicans that are fighting with each other. You got unemployment. Yep, that's a good point. Unemployment. But now here's the crazy thing in that. Again, everything trades on a chart. Look at the unemployment chart, right? You see an unemployment chart that was doing this, an unemployment chart or an unemployment chart that was doing this straight down, right? We've had low unemployment under this administration. And then guess what happens? Then it spikes up, right? And not to get political here, but folks are talking about blaming Trump and this and that and the other thing. But this isn't Trump. This is coronavirus, right? Like this has nothing to do with Trump's administration or nothing to do with the current economy or companies or stock market or anything else. It has to do with fear and panic and FOMO, right? It has to do with people going, yeah, oil. That's a good point. There's just so much going on that there's so much uncertainty that people would rather have cash and gold in their hands than to trust in markets, right? There's lines of people at the banks taking cash out because they don't want to trust their bank with holding their money. They'd rather have their cash sitting in a pillow somewhere because in times of uncertainty, people would rather have cash stuffed in a sock or they'd rather have gold buried somewhere than trusting in markets and banks, right? Because things are so unsure. There's digital currency talk and RFID chips and, you know, it's just bananas, right? So we cannot say any of the market structure right now is normal. None of it. It's all abnormality. It's all an aberration in the market. And we need normality in order to say, I'm going to show you what the next move is going to be, right? When unemployment comes back to normal, when oil prices come back to normal, when the job market is right, when the banks are doing business the right way again, when the fires are out now, but when the coronavirus is over, when, you know, the EU is done trying to point blame at who's letting the coronavirus into their continent, when the Democrats and the Republicans are basically when the election is over and people are stopping with their campaigning, then we're going to start to see some normality again. All right. So all I'm saying, yeah, that's a great word for it, Gary. Nothing is organic right now. And that doesn't matter what side of the aisle you're on, right, left, indifferent. We're not talking about that. All we're talking about is indecision in the market. We're talking about a market that was going strongly in one direction and has now, because of news, taken a sharp turn in the opposite direction. And that is not normal. That throws off your moving averages. That throws off everything, right? If you have, 10 candles that are each averaging 20 pips, right? That means you have 200 pips averaging out at around 20 pips per candle. But if you have one candle in there that spiked and gave you 1,000 pips, right? That throws your whole average off. Now you got to take 9 by 20, which is 180, plus 1,000. And if you average that in to your average, you're going to have a skewed average. 10 or 20 plus 20 plus 20 plus 20, 9 times plus 1,000. And now you have to divide that by 10. And now suddenly you have a number that's way higher than what the normal average is for the rest of the 9 candles because of that one crazy candle. Does that make sense to everybody? Simple math, right? We're talking about numbers that throw off the entire thing. So now you're trying to trust in a moving average that's not giving you true averages. You're trying to trust in a Bollinger Band that tried to open up because of news. You're trying to trust in all these different indicators that are showing you things that really are not real facts. They're based on skewed numbers, right? Is everybody with me? Does that make sense? Yeah, there you go. This is, you know, how we understand price action trading. This is price action trading. This is not depending on anything else. We're just understanding what's going on around us. So again, I want to move on because I promised you guys I was going to give you something powerful, and I'm going to do that. But I'm telling you, don't try to swing sell and don't try to swing buy anything on the GBPAUD right now. And really, you should be cautious of all GBP pairs right now, and really essentially all Forex trading right now because of all the craziness going on in the world. Does that mean we can't trade? No, obviously you guys have been seeing us trade. We're catching moves, we're making money, right? Anybody who's been in the group for the last, you know, couple of months while all this is going on, we haven't had a shortage of wins. We're just doing it differently. We're adapting, and that's what sets us apart from everybody else, because we're not stuck. We understand price action trading. We understand what market sentiment means. We understand what all that stuff is going on. So we adapt, we adjust, and we take what the market gives us instead of forcing and trying to beat our head against a rock. It's not going to happen. We are not going to defeat the banks at their own business, right? The banks are losing at their own business right now. What makes you think you're going to beat them, right? What I'm telling you is we have to adjust and ride the wave. We cannot force our way. We cannot say, this is how I trade and that's it. No, we have to adapt now. I'm a swing trader. I'm not a scalper. I do know how to scalp. I can teach you how to scalp, but I'm a swing trader. But you have not seen me take one swing move in the past 6 weeks, you know, 5, 6 weeks, because I'm like, I want my money in and out, because I don't trust this market to hold my money. I don't trust the world right now to hold my money. So I'm going to take what I see, get in, get out, and I'm walking away from it. Okay. Let me kind of catch up on the comments here. The pip value has drastically increased for all pairs and it affects our risk management. That's a great point, Brian. And I'm going to talk about that a little bit. That's a great point. Do you think all this uncertainty is the reason for huge spreads? 100%. Absolutely. Always on the right side of the trend. Absolutely. Traders Way Gold spread. Yeah, trust me. I know all about Traders Way Gold spread. So guys, I'm going to show you something. All right. So let me just be clear. Last thing I'm going to say about this. What we're waiting on the weekly chart is we're essentially waiting for something to close here. We need a red candle to close. Then we're going to measure from normality to the close of the red candle. And we're going to say, we know that whatever side that closes on, that's going to give us that type of movement in that direction. So let me be clear. Oh, sorry. Let me be clear about that. If we get a red candle, let's say this candle closes to the downside, right? And it's right here, 350, you know, right here. So essentially what we're going to do is we're going to measure from normality to here, 132 pips. And that's going to tell us that if it closes here, in fact, let me do this a little clearer. Let me drop a line for you. If it drops right here, let me turn that line red. Right, if we get a red candle that closes here, what we're going to do is we're going to take two measurements. We're going to take a measurement from normal to close, 157 pips. And we're going to take another measurement from the top of the normal to close, 92 pips. So that tells me that because we closed on the downside and we have a 92 to 157. So what that tells me is from here, from red line, from close to here, we're going to have 90, 97. So let's just say 100, 97 to 157 pips of movement that we know is high probability and safe. Okay. If that same thing happens where the red candle closes to the upside, well, then what we're going to do is we're going to do the same thing. We're going to measure and we're going to have 354. And we're going to have 280. Then what we're going to do is we're going to go from here up. We know we have about 280. to 354. And you know what's crazy is you look at it. Look at my zones. This is what it's given us, right? So obviously that's speculation. We don't know exactly where we're going to get a red close at, but that's how we're going to trade it. We're going to wait for we have a red close, and then we're going to take the high probability pips on the swing. Everybody with me? All right, good, good, good. I promise you, when it comes, I'll call it. All right. Now I'm going to show you something that's pretty awesome. I told you guys I was going to give you something sweet. I'm going to go to the Oanda chart just because I don't use it, and I want to have a blank chart with no marks on it. Okay. Now, we all know that we want to catch solid moves, right? We don't want to chase the market. I don't want this to happen. And then right here, I'm looking at a buy because I see bullish movement, right? Because obviously that's not solid, because it could turn around and, you know, show me down movement just like that, right? So what we want to do is we want to catch, if we know that there's a trend coming, we want to catch it as early as possible. You know, we want to catch it as early as possible. Maybe right here, we want to catch off the retest, but we don't want to catch this and then eat this. We don't want to catch this and then eat this. We want to find a way to get into the earliest position on the moves. All right. And so that's, I'm going to show you something that's going to help you do that. All right. So first of all, let's understand some price action real quick. All right. When you see candles move, all right, let's say you got some movement here. We all know the wave theory. I've talked about that in depth. I think we all understand wave theory at this point, and the wave inside the wave, and I think we understand price action at this point. But what we understand, what we don't understand is how to catch, you know, that movement properly. And so I want to show you a couple things that I think will be helpful. First of all, understanding what happens here. We have an extension, a correction, an extension, a correction, an extension, a correction. That's just what the market does. Okay. And it's not always exactly like that. Most of the time it looks more like this. Oh, no, not like that, but it looks like this, you know. It's always moving crazy, right? So it's moving all kind of, obviously I can't draw, guys. I'm not an artist here. I don't claim to be. But what we have to understand is I just want to help our mindset a little bit, right? When we see this, how do we know that this is coming? Or if this is coming, right? Well, we have to understand price action trading, right? So if we see a move like this, we have to find our zones. We have to find our levels of what used to be resistance is going to become support, right? Very simple stuff here, beginners. So we're expecting for a pullback to come somewhere in this neighborhood, right? It's not always going to be down to the pip. You know, it could be within 20, 30, 50 pips, depending on the chart you're on. If you're on a weekly chart, it could be 100 pips, you know, whatever. But we're expecting it to come back into here and then push back up, right? And to retest all of the zones. So every time a new level is broken, right? Now this level needs to be tested. Now this level needs to be tested, right? So on and so forth, right? Everybody's with me? Then this level, right? And when we see this level get broken, now we're looking for this level, right? And this is all on the fib, right? All of this stuff is on the fib. So if we see it come down to here, now what we're doing is we're waiting for oh, I lost my drawing tool. Yep. So we're waiting for this to be tested, and then we're waiting to see, is it going to just pull back up, retest, and do this, right? And again, we just have funny movement in the market. Or now we're looking for this to happen because we need a retest down here, right? So this is just simple price action. We're just looking at levels and understanding how they work, right? Every time we see a retest, we're looking for a push up or a break and a retest every single time, right? That's without exception. So now, just understanding that a little bit, that helps you to understand some patterns, right? So if you have something like this, right? It retests, right? We're looking for the retest here, but instead of retesting, we have a major breakout. Now we're looking for the retest, and maybe it's going to do this, but instead it doesn't do that. What it does is it comes down and retests, comes up, and then it comes down and sets the new low. Now what used to be an uptrend is now a downtrend, right? Because in order to have a trend, you have to have to set the direction, then you have to confirm the direction, then you have to set the next level, then you have to confirm the next level. That's when we can call it a trend. I can't call this a trend until I have all 4 of those moves happen, right? Is everybody with me? So once I have that and I have a trend, now in order for it to be an opposite trend or a counter trend or, you know, something like that, then we can see patterns start to shape. Now in this particular case, right? In this particular case, somebody tell me what kind of a pattern that looks like. Somebody type it in. Come on, this is advanced class. Somebody better be able to tell me this. All right, now we're talking. Now we're talking. All right, I was about to say advanced class. If y'all can't identify head and shoulders, we're going back to beginners. But so that's understanding how a pattern forms, right? So we're not looking at, you know, so many of us are just looking for the pattern, a teacup or whatever it might be. We're looking for a head and shoulders, or maybe we see a big move, so we're starting to look for a flag or a wedge pattern, right? We start to see all these things happen. And this is exclusively what we're looking for. You know, when we see a wedge, we're just looking for this. And so we're waiting and trying to look for the breakout. But what I'm telling you is that in order to understand those things a little bit better, we have to understand what makes up the pattern. In order to get a head and shoulders, we have a trend, and then we have a reversal. So this right here, the head is the reversal zone. The shoulders are the confirmation zone. The neckline is the sell zone, right? So we don't trade it from here. We have it here. It pushes down. It confirms. Remember, sets the direction, confirms, and it breaks out. When it breaks out, we sell, right? So we know that that's some pretty basic stuff, right? So now watch this. How many know what the ATR is? I'm not going to teach in depth on the ATR tonight, but how many know what the ATR is? Anyone? I know we don't really use it very much. 555. He said 5. I'm not sure exactly what 555. Oh, 5. 5 means no, apparently.
My bad, Joe. I'm just playing, man. But no, I don't know what the ATR is.
Yeah, that's cool, man. That's cool. The ATR, a couple of people wrote it in there. It's a strength indicator. It's a volatility indicator. It means average true range. Okay, and essentially what it does. Right, what it does is it gives you. It's a volume indicator that is basically giving you the number of pips in your range. Okay, so what in essence, if this is a 14 ATR, average true range, what it's doing is it's measuring 14 time periods of your chart, and it's giving you the average number of movement in each candle. So essentially what we're looking at here is like from here to here, we had 580 pips or so, right? The next one is tinier, right? So we had 376 from top to bottom, right? From here, the next one was even smaller. You know, we had 170 or whatever. And it essentially, in this, for example, it shows 14. So it's going to take the last 14 time periods. And what it's going to do is it's going to take that number. Okay, this was 350 pip of range. This was 100 and something pips of range. This was 100 and something, 100 and something, whatever. And it's going to take those numbers, add them up, and divide them by 14. And essentially what it's going to show you is, on average, over the last 14 candles, the average movement was X amount of pips. And you can go right here and you can look, and it'll say, 324 pips. The average number of pips on the candles in the last 14 candles as of this line right here was 324 pips, 325 pips. Okay. So what that does, and I'm not getting into the ATR too deep tonight, but it's really powerful, because what it allows us to do is you can take the ATR and know that number. If it's three, if like right here, right? You see where we are right here? The average number of pips right now in the last 14 candles on GA on the weekly has been 521 pips. So the average candle is giving us 521 pips in the last 14 days, or 14 weeks, I'm sorry. If we know that the average candle is giving us 521, what you can literally do is use that to set your stop loss. And when we do end up getting into a long or a short trade, whatever, we know that if it goes more than average, then we have a reversal, right? That's simple price action rules, right? Isn't that what I just showed you? Right? If we know that this is it, right? And it comes back, we should be waiting for a pullback to here. But on the fib, if it passes the 50 and it goes down deep, we're starting to slow down and going, wait a minute, this might be a reversal. Everybody with me, right? So what I'm saying is that what we're looking for is, if the ATR tells you that the average is 521 pips, you can literally go from, I wouldn't do 521. I'd probably do 525, because you don't want to get stopped out, on one pip, or maybe even 550. But you can literally take the ATR. A lot of people multiply it by 1.5. Some even do 2. I think that's too crazy. But you can take the ATR, whatever that number is, multiply it by 1.5, 1.25, whatever you feel comfortable with. Do your research, do your market structure, and you can literally set your stop loss that many pips, and know that you should be safe if your chart markup was accurate. Because if your chart markup was accurate, we shouldn't be seeing a reversal. We should be seeing a continuation, right? So, that's the ATR. Now I'm going to show you something that takes that and it just goes crazy on it. Okay. How many's ever heard of the Vortex indicator? How many's ever heard of the Vortex indicator? I knew that's where I would get everybody. The ATR, I figured some people might know it. The Vortex, I figured nobody was going to know that. Guys, I'm about to give you the business, man. I'm about to give you the secret sauce right now. Y'all ready for this? I can't even go any further until I get some ones. I need some ones or some 9. I need 9s, in fact. Give me some 9s. I'm about to give you all the business right here. All right, ready? All right, here we go. All right, everybody wants the business. Everybody wants the sauce. I got a couple of 1s and 2s and 3s, and oh my gosh, people are ready. Let me show you the Vortex indicator. The Vortex indicator is, in my opinion, the most powerful volume indicator that there is. And it's actually a fairly new indicator. I think that it is literally the most powerful indicator that there is, period. As far as volume and understanding. Again, most of you who've been in my classes, I'm not an indicator trader. I am a price action trader. Most of my classes, you don't even see indicators on my chart. You see me marking up charts. That's what you see me doing, right? So that's what I want to help you understand, is that if we're gonna trade, it has to be based off of price action. All right. So now let's come down to the 4 hour, and I want to show you something. How would I mark this up on the 4 hour? Well, first thing I would do is I would realize that our most recent move that we've been, remember 1, 2 go through. Some of y'all want to mark it like this, right? And I think that's a mistake in my opinion. Not that that can't be right, but that's a secondary move, right? That's not how we would mark this. Why? Because was this information not important, right? So how would we mark that? Well, we get our move, 1, 2, and you go on through, right? 1, 2, you go on through. Once you get that second low, that's what we confirm off of. We don't confirm off of 1, 3, 5. We confirm off of 1, 2, right? So 1, 2, go on through, right? Now, 1, 2, we go on through. Now this right here is less important. Why? Because 2 dictated the trend. 5 didn't dictate the trend. I can't dictate a trend off of 1 and 5. I have to dictate the trend off of 1 and 2. Everybody with me? Low, high, lower high, higher high, right? Everybody with me? That's how we dictate a trend. Now, when we see this, we see it's a confirmation. Now, when we see this, we see it's a break. Most of us would have been fooled by that, saying, you know, I'm just waiting for it to break the trend line when it already broke the trend line. And you're missing out on pips. You probably could still catch a good entry right over here, but you're missing out on all this. I'm catching you a better entry right here like this, right? Because now I'm showing you that this is the break. Notice that little spinner top right there. Let me spread that out a little bit for you. Notice that little spinner top. Shows me, boom, goes down, pulls back, drops. There's the break, all right? Now, the next thing I'm going to look at is the fact that, like I said on the weekly chart, we don't just trade just one little thing. Okay, the most recent thing tells me we have some bullish movement. And what does that mean? I'm going to show you a little bit deeper. I'm going to go like this because remember, this was valid until it was broken. That was the trend right here. 1, 2, go through, but then it was broken. So that trend is no longer valid. Right? Everybody with me? So now what do I have? I'm waiting for, now what I've done is I've taken price and I've captured it inside of a very small zone. So rather than me looking way out here and way out here, I've got price that's just moving around in here and I know it's going to break one way or the other. Right? I literally just captured the price inside of my markings. It broke out to the downside, right? And how would I have known that any other way? Yeah, yep, it's a wedge. But how would I have known that, right? So watch this. Let's go to the ATR or to the Vortex. This is not what you may think it is. This is not a moving average crossover. This is a volume indicator, which means we don't use it for entry. We don't use it as a sole source of trading. We use it as a confirmation of price action, right? So the blue line, remember the ATR? These numbers are based off of ATR numbers. The numbers that dictate the Vortex numbers is basically the ATR. But the problem that I have with the ATR, although it's a very powerful indicator, is that all it does is show me volume. So on the ATR, you know, in fact, let me just slap that back on there real quick. Notice on the ATR, there's only one line. And you would think, like, so for an example, let me just confuse you real quick. This price right here is moving down, right? Pretty strongly. 4-hour chart, we have from the top to the bottom, we have over 1,000 pips, 1,100 pips on the 4-hour chart. You would think that pushes it down, but the ATR is not a directional indicator. It does not give us direction. It gives us volume. So when price is moving sideways, the ATR is low. When we have tiny little candles that aren't giving us a lot of volume, it's showing us the average move in the candle was only 56 pips, right? So the number on the ATR is very low because what it's doing is it's saying there's not a lot of movement. When you see the line on the ATR go way up, it's not because of direction, it's because of big solid movement. It's showing you that in any one direction, whether it be up or down, that price is going strong. The higher the number on the ATR, the stronger the momentum in the market. Does that make sense to everybody? So we cannot say that the ATR is going up, so now that means price goes up, buy. No, it means that whatever direction it's going strong when the ATR goes up. My issue with the ATR is that all it tells me is information. Down movement and up movement is all combined into one number. That number right here of 237 pips, the average number of the last 14 candles right here is 237 pips, right? But it doesn't really give me any information more than that. So the ATR goes up even in a sell. Yes. Glad you understand that. ATR goes up even when it sells. When the price drops, watch, let's find something. So of course, look, you got a big move up. That's not a good example. Trying to look for a good down move, but obviously it's been sideways on the 4 hour for a while. But yes, just to show your point, yes. When it goes down, it's still going up. Okay. ATR is the average of however many candles it's set for in respect to how many pips. Yes, exactly that. Exactly that. So although we had a big stark change in direction right here, the ATR was still very high because we had a high number in each candle, a number of pips in each candle. So it does not help me understand which pips were positive and which pips were negative, which pips were bullish and which pips were bearish, right? It's 11:05. I'm giving you guys a little bit extra tonight. I want to give you something. I know we've been on over an hour, so if you need to go, that's fine. You can go. But I'm going to give you guys a few extra minutes tonight since I've been kind of off my game the last few days anyway. So I'm going to give you a little extra tonight. What the ATR does not do is it does not tell us a difference between positive or negative movement. It just tells us movement, big or small, okay? Now, that's good information. Having that information is awesome, but that's not going to tell me everything I need to know. Now, let's get back to the Vortex. The Vortex is not only the ATR, but it's also a directional indicator. So what it basically does is it takes the ATR numbers and splits them between positive and negative averages, all right? So it's basically taking the average true range numbers and adding directional value to it. And so when you see the blue line, which is your positive ATR, your positive average, and your red line, which is your negative average, now you have something that is absolutely powerful. Because now, watch this. When my blue line is on top of my red line, or when the blue line is higher, in other words, watch this. When you look at it just on its own, if you look at it just on its own, blue line only, this is telling you only the number of the average of all your blue candles. It leaves out the information of the red candles. Is that what, everybody with me? So it takes away the information of the bearish movement. It's giving you the average number of only bullish movement. Okay? Now, when you go back to it and you just look at the red, it's only giving you the average of red candles. It does not include the number of positive movement. It's only giving you the negative movement or bearish movement. So as you can see here, this is moving down, but this is moving up, because what it's saying is there is a strong bearish or negative pressure in the market. So negative pressure is getting stronger. Does that make sense to everybody so far? So now you put them together and you have what I think is one of the most powerful tools in the Forex market. When you have red pressure that is higher than blue pressure, what does that mean? Sell. When you have blue pressure that is higher than red pressure, what does that mean? Bullish, right? So now, let's make sure we're muted. So now if you have stronger bull pressure than you do in bear pressure, and this is starting to show you exhaustion, are you still looking to take a sell or a buy? No. That's going to tell you what? If I have, yeah, so now you know what direction is stronger. Exactly. So what this is going to do is, if this is telling you to sell, but the vortex is telling you to buy, you're generally going to see sideways movement, right? You're going to see sideways movement. If this is telling you, if price action is telling you that we have bullish movement, but this is telling you that there's bear pressure, what that's telling you is we're probably looking at some sideways movement. But if you have bullish pressure in the price action and bullish pressure in the vortex, it's game time. If you have sell pressure in the price action and sell pressure, where in other words, the red is coming higher than the blue, right? Game time. So watch this. We just seen that we broke a wedge. Look at my dotted line, guys. Right here, we approached our wedge. How do we know if we're going to break our wedge? Look at that. Look at that crossover. That shows us that bull pressure just became stronger. So right there, it's kissing each other. We don't get in because we don't have confirmation. We didn't have a breakout yet, right? We always wait for the breakout. I don't care what this indicator is not the way I trade. I'm not going to take this indicator for its word. I'm only going to use it for confirmation of what price action is telling me. Right now, price action is telling me that I'm breaking a wedge and it's time for me to sell. So what do? I'm going to go to the vortex and I'm going to say, does the vortex confirm what my price action tells me? And in this case, I just had bear movement get stronger than bull movement. I get my close outside, boom, time to sell. Why? Because it's telling me that there is more sell pressure than there is buy pressure in the market. Now, the next thing you're going to have to understand is that this is going to give you some false signals once in a while, especially if you're trading the lower time frames. It's going to try to cross over like these kind of things like this. You can't trade this stuff. This kind of stuff like that, you can't trade that, right? That's craziness. Well, I wouldn't trade that anyway. Why? Because I'm in the middle. Why would I trade right at a level of resistance, right? That says blue is buy. Why would I trade a buy right here at a level of resistance? That don't make sense, does it? Now the pullback comes. So he says slap a MACD for double confirmation. I'm going to give you something even better. I hate the MACD. If you like it, it works for you, good, do your thing, but I hate the MACD. That's cool though. You can use it for a double confirmation, but let me show you how to eliminate false signals. You go back and you drop a 200 moving average. That's giving you the sure direction in the market. That's the big indicator, right? Now, watch this. When I see a breakout here, I see a strong move there. And yes, I eat some drawdown, but look, when that pulls back, I'm not looking for it to drop. Why? Because look at where my blue is. So if I were to get in here, sure, I'd eat some drawdown, but look at what I would have got. So I would have ended up right there with 500 pips in the positive because I trusted the fact that even though I pulled back, I had a lot of distance between sell pressure, even in a strong sell move right there. I want to show you that. Look how powerful that is. From here to here is 412 pips. You dropped 412 pips in the market, and the sell pressure isn't even close to the buy pressure. You with me, guys? You just dropped 400 pips in the market, and the sell pressure isn't even close. I'm not even thinking about a sell right now. All I'm doing is saying, I know this is a retest, right? This is just a retest. So when I come down, boom, I come right back to my trend line, and boom, look at that movement. I could catch another entry right here if I wanted to, and catch 500 and almost 600 pips, because this told me this is not a reversal. This told me I still have way too much buy pressure in the market for me to be thinking about this thing breaking out right now. But now this time when it comes down, look at what's happening, right? This time when it tries to retest the trend line, watch this. This time you only have 275 pips in the market. I'm sorry, I deleted that. This time you only have 275 pips, 260 to 275 pips in the market. So you only dropped 260, which is a lesser drop than you did before. This is less movement of sell pressure than it was before. But this time, sell pressure is higher than buy pressure. How is less movement giving me more pressure? Because I'm at the end of a wedge and my average numbers are smaller, because here I was in the beginning of a wedge, but here I'm in a smaller wedge, less buy pressure. So it means it takes less sell pressure to get above. And so once the sellers take over, I break out. Guys, I don't even know what to say about this. It's just so simple, right? This is the game right here, guys. Game over. We own the market. We own everything. We are in control now, right? You can go all the way back, and I challenge you to test it. I challenge you to test it. It's beautiful. It's beautiful. The Vortex is powerful, right? Now watch this. I'm gonna show you one more thing, and then I'm gonna let y'all go because it's already 11:16. Y'all already know I love my Bollinger Band. Guys, look at this. Vortex, I use it on depending on the chart. See, and that's a cool thing on the chart. That's a cool thing for the Vortex is it comes as a standard 14. It comes as a standard 14. What I like to do is I like to spread it out depending on certain charts. And now this is where it can get a little confusing, and I'm just going to be real. Again, this is advanced class. I only trade GA. So if you ask me what's the settings on EU, that's a lot less volatile. So for me, what I do is on a more volatile pair, something like GA or GN, GJ, you know, something that really moves a lot. I would set the numbers out a little shorter, right? So 14, 17. For something that's more slow moving, you definitely don't want fake outs. So you probably want the numbers to be extended out a little bit more, 30, 24, right? So honestly, whatever pair, and this is why it's so important to know what you trade. You shouldn't be trading 25 different pairs anyway. Figure out what it is you trade and find the right setting for your pair and for your time frame. For the longer time frames, you can trust the shorter average, right? So if you're on a weekly time frame, knowing that you're getting 400 or 500 pips, I'm talking to Vortex right now, Justin. If you know you're getting 400 or 500 pips per candle on the weekly, you know you can trust that average over a shorter period of time, a shorter number essentially, because 14 on a weekly is 14 weeks of movement. 14 on a 5-minute is only giving you, you know, an hour, you know, of movement. Does that make sense? So the shorter the time frame, the longer you want to extend it out. If you're I personally would only use this for confirmation and scalping. I would never try to use this in a short to 5-minute, 1-minute type. I don't trade that way anyway, but if you're trying to trade the 1 minute with it, you're going to get a lot of fake outs. You're going to get a lot of false signals. All right. So you're going to need some other things to filter this through that are going to eliminate false signals. All right. What I would say is use the moving average, because, that's what I was going to show you, the moving average. If price action is above my 200, I'm not even thinking of anything sell, right? If price action is above the 200 moving average, I'm not even thinking about a sell. So even when I get across a red movement to the upside, time to sell, right? You would think just on this crossover that it's time to sell. But look, it just fakes out. Why? Because look, I'm above the 200 moving average. Why would I be trying to sell up here? I'm not even close to the moving average. I'm not even close to the 200. I still got a couple hundred pips to go before I even approach that. So I'm not even thinking about a sell at this point. All right. I'm only thinking buy signals when I'm above that. So the way to filter that out is, first is you look at your price action. Second, you look at your moving average and determine what kind of signals you're willing to take, whether it be buy or sell signals. Then thirdly, you look at this and take the crossover on only in the direction of what you're able to take based on everything else. So if price action tells me buy, I'm above the moving average, and all of these things are going on. Now I'm getting a buy signal. I take the buy. Now, in this case, I know I'm breaking a wedge. And look, when I'm breaking the wedge, I'm also approaching my moving average. I'm not way up here. I'm way down here. I'm getting real close to my moving average. So now a sell is possible. So why am I looking at a sell? I'm looking at a sell here. I get in. Now, mind you, 4-hour chart. This is not a 30-minute chart. That's 200 pips, guys. You catch that 200 and then here's what I'm going to tell you. I guarantee you, I'll let you guys test this out. Come back to this recording and tell me I'm wrong. What's going to happen next? I'm going to tell you, I'm going to prophesy to you like we say in church. All right. Came down here, it's pushing my moving average. It's going to pull back up. It's going to retest up here. And then what's going to happen is either I'm going to come up here and move back up, or I'm going to retest the bottom of my wedge because that's what I got to do anyway. And I'm going to break out. And what this is going to do is this is going to come a little bit down as I'm pulling back. And then it's going to shoot up. If this happens, that's going to happen. Right? If this happens, then this is going to happen. And then this is going to come up. Okay? So what I'm saying is all this is giving us is direction. It's giving us direction and volatility. And guys, it's the game. It's the game. It literally tells us the direction, what we need to do, and the strength of what we have. It's absolutely beautiful. So now you look at this and you go, well, my God, I've got 49 pips and 63 pips. So this is the last thing. I promise this is the last thing. I said that last time, but I'm gonna say it one more time. Now I'm really sounding like a preacher. I'm about to close. I'm about to close. So if we know we got 63 pips average on the so watch this. Let me see. Yeah, we got 64 pips basically average on the red right now. So that means right here, I'm gonna wait for the retest. So my stop loss is gonna be somewhere in the 63 times 1.5. So essentially, I'm gonna risk about 90 pips, right? So if I were trying to get in off of this retest right here, I'm gonna, oh, I messed up. All right, so if I'm gonna get in off of the retest, I'm gonna come in, if it retests here, and let's say I'm looking for this move down, I'm gonna risk 90 pips, okay? Let's just say 90. So right there, notice that that's right at my level of structure. Notice that that's right at my level of structure, right? So you risk that 90, and if it goes beyond that, if it goes beyond there anyway, we're no longer looking for a sell anyway. We're looking for a buy at that point. So why are you still looking to be in the trade? You take your loss and you move on. If you know you're looking to risk 60, then you should be able to get risk 90, then you should be able to get 180, 1 to 2 risk reward. Look at where that is. Next level of structure. It literally goes from one level to the next level. Guys, this stuff, you can't make this stuff up. You can't make this stuff up, right? It's absolutely just beautiful, right? And then you ask, do you incorporate the bands? Yes. I do still incorporate the Bollinger Band. And you look here. You got your Bollinger Band in here. It pushed down right here. It's coming down. Boom. Right there at your breakout zone is right where your band was, right where your crossover was, and that was right when you were breaking out of the band. Notice that when this crossed over, my band started to expand. That means volume. So I have multiple confirmations that I have sell volume on GA 4-hour right now, which means right now I'm waiting for a retest. I'm waiting for the retest right here. So I'm not looking to sell right now in GA because I still have to contend with that. I'm waiting for a retest. Confirmation right here. Let me see where this is. Let me see what my bands look like. Let me see where my moving average is, right? And then the drop. This is the move we want. That's the move we want. Guys, I've kept you on here a long time tonight. I feel like Curtis, man, like a 2-hour call. It's got to be on it forever. So I gave you the game tonight, guys. I hope that's going to help you. That's some stuff that's going to really, really help you go to the next level. So take it, run with it, and let's get it, guys. All right. So once the recording is done, I'll post it in so you guys can have the recording. And I hope this helps. Go ahead and give me that 999 if this helped you tonight. There we go. I love it. I'm a beginner, but this was powerful. Good. I'm glad. I'm loving all the 9s. I love it. Justin said, thanks. You're welcome, bro. Hey, well, Justin's new to the team, man. Welcome to the team, Justin. Kevin said he got a question. Post your question. It's already 11 something. I don't want to keep everybody. Go ahead and post your question in the Telegram. Post your question in the Telegram, and I'll try to help you. The Vortex number, that's just post a question in the Telegram, and I'll help you, and we'll go from there. Cool. 9 times 3. I love it. All right, guys. You guys have a great night, all right? God bless.